What's up, everyone? It's Scotty with Money Investing. Tomorrow is the big day. We've got inflation numbers, so CPI numbers for the month of April coming out at bright and early 8:30 a.m. Eastern. I will be live to cover that report, and this will be a public live stream, so you're all more than welcome to join. But in this video, I wanted to go over some of the expectations from Wall Street, different banks, different investors, what the expectations are. Because at the end of the day, we know the market really moves on expectations. Whether the numbers come in higher or lower is really what's going to drive the markets eventually. So hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, all the other benefits, including private live streams for members as well. And there is a 16% annual discount available that you can take advantage of with the link down below. So this right here is going to be the numbers. Well, this is first of all Goldman's preview of CPI, and this was posted by Blake Millard, and he says that we expect a 0.47% increase in April core CPI above the consensus of 0.3%, corresponding to a year-over-year rate of 5.59, almost 5.6% if you're rounding up, versus the 5.5% consensus. And they also expect headline CPI to also increase by 0.5%, which is going to be a little bit higher than the consensus of 0.4%, and year-over-year number to come up to 5.1% instead of 5%, which is the consensus and the prior number. And this is some of the increases that they are seeing in those specific categories. So core expecting an increase of 0.47% on the back of apparel, new cars and used car prices to rebound by 4% is what they're expecting in April, month over month. And then when it comes to tobacco prices, slightly up 0.5%, and also expecting rent of primary residence, so shelter, also go up 0.5%, with rent or lodging away from home down 1%, and then public transportation to be down 1%. Transportation services ex public down about 1%, pets 0.4%, recreation expats up over 0.5%, education up 0.4%, and owner's equivalent rent up 0.5% as well, and residual also up 0.4%. Of course, you can see the weighting over here for specific categories. Owner's equivalent rent, which is about a third of inflation, 32%. They're expecting that number to be up 0.52% month over month. And shelter obviously is going to be the big wild card. If shelter prices are lower, that can help core inflation and headline inflation to come down. But if, of course, rents are higher, then that's not going to be great news for the market. Now, this is going to be a bit of a hot report, and Tom Lee from Fundstrat also tweeted that if this is indeed the report that we get tomorrow, then this is going to be a, quote, hot report for the market, because the consensus right now is for 0.4%, CPI month over month, headline to set at 5%, and of course month over month core at 0.5%, and year over year at 5.5%. So we're going to be a little bit higher than that, is what Goldman Sachs is also suggesting. This right here are going to be CPI estimates from some of the other banks. So we already went over Goldman Sachs, but Credit Suisse is expecting 5%. We've got JP Morgan at 4.9% on headline year over year. Scotiabank 4.9%, Nomura 4.9%, Barclays 5%, Bloomberg 5%, Bank of America 5%, HSBC 5%, TD Securities up 5%, UBS 5%, Wells Fargo 5%, Visa expecting 5.9 or 5.1, excuse me, not 5.9, 5.1, and Goldman's expecting 5.1, CIBC 5.1, Citi 5.1, and Morgan Stanley 5.1. So few banks, a handful of banks, and investors are expecting inflation to be above 5.5%, 5%, or closer to 5.1, but majority of banks are expecting CPI to be at 5%. The median is going to be at 5%, is what majority of banks and institutions are expecting at the moment. This right here is from Steven Anastasio. I've never been able to pronounce his last name. I do apologize. But in April, he says, I forecast U.S. CPI growth to remain at 5% versus 5% consensus, and core CPI to remain at 5.6% versus 5.5%. Is going to be that consensus. While such a combination risks unnerving the markets, I expect CPI growth to fall sharply in May and June. But this right here is the number that they are expecting for headline CPI at 5%. Pretty stagnant and pretty comfortable at those levels. And finally, JP Morgan's game plan for tomorrow. They're expecting the most likely scenario to play out for CPI comes in between 5 and 5.2%. Well, that is Duh, that is literally what the probability is also suggesting for, but they didn't really drill down on what that specific number is going to be. Of course, they are expecting, where is JP Morgan, 4.9% as a consensus, but this right here is going to be their game plan and the reaction for the S&P 500, which I've always found interesting on how they can actually link those two together, because again, they're not very there's no pattern that can be drawn with respect to the correlation between inflation and S&P 500. Yes, they move, but it's always been very random. You can't really pinpoint exactly how the market's going to move, based on the CPI reading. But anyway, we've got, if it comes in above 5.5%, which would obviously be very, very bearish reading for the market. They're expecting S&P 500 to be down at least 3%, and they're putting in a 4% probability for this scenario. If inflation comes in 5.3 to 5.5%, they're expecting S&P to be down 75 basis points to as much as 125 basis points, and they're pricing in a 25% probability for that. And between 5 and 5.2% is the most probable outcome according to JP Morgan, with 50% probability, and they're expecting the markets to be up tomorrow 0.5% to as much as 75 basis points. And if we come in way lower, 4.7 to 4.9 or 4.5% or lower, they're expecting the markets to be up significantly, up anywhere between 1 and 2.5%, but the probability of that happening is only 21%. So only 1% for us to be up over 2.5% tomorrow, and of course only up between 1 to 1.25 is 20%. So the most likely scenario from JP Morgan is that we're going to be up, somewhere between 0.5% to as much as 75 basis points. Of course, we're going to find out tomorrow, and I will be live for that report. But again, this is my bear case, base case, optimistic, and bull case. Bull case obviously represents a significant deflation, us coming down on a year-over-year basis, and also prices going down in negative territory month over month. Optimistic is going to be slightly better than what the consensus is. The base case is going to be the consensus, and the bear case, unfortunately, is going to be much worse than what the consensus is. And for headline and core to increase on a year-over-year basis. So far, we've kind of stabilized a little bit at 5 and 5.6, 5.5%. If we start to move up, that's going to be a problem for overall inflation, for overall CPI. Now, going over to the markets, we are very much at a resistance, as we've already talked about. Tomorrow is going to be the day where I feel like there's going to be more direction determined in the markets, whether we get a breakout with a lot of liquidity past 4,200, and that's going to come under their purview of about 1 to 1.5% move to the upside in case inflation numbers come in good. But if we do see any type of acceleration or any type of a hot print on CPI, we'll be ready for a potential rejection at these levels. But either way, there is going to be a bigger move because markets are looking. This is literally the most important indicator for the Fed, because the chain of thought is something like this. You get inflation numbers, you get the Federal Reserve's response, you get the interest rate hike or pause or cut, and that moves the market. That, first of all, moves the economy, and it really puts a lot of impact on the economy, the credit, the lending facilities, of course, the earnings, the recession probabilities, all those things. And then, of course, the market also moves on all of that. So I've mentioned this before, and I mentioned this in all of 2022. Inflation is a lagging indicator, but for the Fed and for the market, it is a leading indicator, because that's really what's going to drive, or that's really what's going to basically force, or not really force, can't remember the word that I'm looking for, but it's really what's going to guide the Federal Reserve's policy, and that's what's going to guide the market. So that's where we are. Hope you guys enjoyed this video, found it helpful. Let me know your thoughts down in the comment section below. What are you expecting from inflation numbers tomorrow? What are your thoughts? Are you expecting inflation to accelerate, go higher, lower, pretty much stagnate? What are your expectations? Let me know in the comment section down below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.